My name is Heather Lutzy, and I am the District Director for the Sacramento District Office of the U.S. Small Business Administration. So in California, there's actually 6 different district offices, and that's really based on our population. The only other state that has as many district offices is Texas. So my territory, or the Sacramento District Office, encompasses the 22 northeastern counties of the state. So we go up to the Oregon border, over to Nevada, down through San Joaquin, and over to the coastal communities. So there's other offices within California. So if you're calling from out of the area, absolutely, we can get you the assistance that you need from that office as well. Just want to kind of preference this conversation as a conversation. I want to make sure that you're able to ask any questions that you might have with respect to some of the talking points that I'm going to go through. And I want to, hear some of the challenges that you have as well. And perhaps we have some answers. And if we don't, we can tell you where to find those answers. So I guess we'll get started. So if you're not familiar, the U.S. Small Business Administration is a federal agency. It's one of the smaller federal agencies in the government. Well, I should preference that because we were one of the smaller agencies. We went from, just say January of 2020, of an agency of just below 2,000 people, and now we're well over 9,000 people, and we continue to hire. So there was just another ad that was out there on LinkedIn today regarding hiring customer service representatives, attorneys, paralegals, loan specialists, etc., because of the pandemic and the situation that all small businesses are in, and the need, the desperate need for capital at this time. So the agency was founded in 1953 as part of the Small Business Act. And with the SBA, we kind of have a 4-pronged approach to the way that we provide the services and products that we offer. Those services and products would be such as capital, contracting, so contracting opportunities with the federal government, counseling. So we provide counseling through our resource partners. And our resource partners you may have heard of, you may not have heard of, but I'll just go through those really quickly. So we have SCORE, which is an acronym for Senior Corps of Retired Executives. They are a partner that provides mentorship and counseling to small businesses, whether they're starting their business or whether they're looking to pass off their business or sell their business. Then we have the Women's Business Center. And the Women's Business Center also serves men, but the Women's Business Center, again, they provide the counseling and resources. They also provide access to capital, and they also assist us in our contracting opportunities. So under the Women's Business Center, here in Sacramento anyway, they have, pardon me, I've got allergies. They have something that's called the Procurement Technical Assistance Center. And that Procurement Technical Assistance Center, or PTAC as we refer to it, helps businesses get ready for contracting opportunities through the federal government. The federal government is the largest procurer of products and services in the world. So it's a huge, huge market. The federal government purchases anything from, say, janitorial services, construction firms, restaurants via like a catering type thing, hotels, just a menagerie of different fields. So we assist along with the PTAC and the Women's Business Center, and our contracting officers assist small businesses in getting to an even playing field with the big guys. And so we teach you how to go about looking for those opportunities, marketing yourself, creating, a business plan surrounding contracting opportunities. Then we also have in that area a contracting program. So with the PTAC, or Procurement Technical Assistance Center, they will help you kind of get contracting ready. Once you are contracting, whether it be with a city, municipality, state, county, whatever, they can help you gain access to those federal contracts as well. But with SBA's contracting opportunities, it's actually, there's a requirement that you be in business for 2 years. So if you're just starting out, it wouldn't be applicable for that particular thing. We have the program called 8A, and 8A is simply part of the Small Business Act. And the 8A program is really something very special that the agency offers. It's a 9-year program to where you get mentorship and guidance and truly contracting opportunities that could be considered sole sourced. So what happens is a sole source contract is, say, for example, a federal agency contacts my office and they talk to our lead business opportunity specialist. His name's Paul Tavernia. So Paul would say, take that call, and that federal agency, let's just say it's Bureau of Land Management, and they are asking, hey, we have this, $100,000 contract. What firms within your portfolio would be able to fulfill that contract? And then Paul would go through kind of his Rolodex of firms that are in the program and say, ABC contracting company can do this, or, so-and-so can do this, and give those businesses that lead. And it typically works out to where, say, the Bureau of Land Management would accept that. And then the contractor would perform on that contract. And what's nice about it is then they're building their portfolio to go out and look for other contracting opportunities or RFPs. That's a great, great program. So again, we kind of do that dually with a couple of different entities. And then getting back to the resource partners, the last resource partner, I'm sorry, not the last, but we have another resource partner called the Veterans Business Outreach Center, or VBOC. And the VBOC deals specifically with veterans, and they provide a menagerie of services, again, whether it be contracting assistance, whether it be capital assistance, counseling. They actually also run what is called Boots to Business. So every service member, when they're getting out of the service, is required to go through a program. Part of the program that they go through, and it's a transition program from military to private sector. Part of that transition is through the VBOC and SBA, and it's called Boots to Business. So that's a great, great program, but again, only available to veterans. The other resource partner that we have is the Small Business Development Centers. And the Small Business Development Centers are a vast network throughout the United States. There are literally 1,000. And they have different centers within each geography of the US and our US territories. So with those services, again, I'll just touch on, say, our local one here in Sacramento. So we have our Small Business Development Center through the Metro Chamber. It's a shoot off of the Metro Chamber. We also have our Regional Finance Center for the Small Business Development Center located here in Sacramento. And that's run by a gentleman named Scott Rogowski and Sunita Maharaj. When those two, they concentrate specifically on capital and getting folks ready for capital opportunities. So whether it is putting together financial plans or projections or a generic business plan, a capability statement, whatever is needed in that, that's what they would provide. Other than that, we work with other agencies, whether that be city, county, municipalities, with the Black Small Business Association, with different chambers around, different educational facilities. So we've got relationships with Sacramento State, with UC Davis, with American River College, just a menagerie of different entities, because a lot of those businesses or business ideas come out of the classroom. So it's a great introduction for those businesses to kind of get engaged with what's available to them through the Small Business Administration. So I know that that's a lot to take in. At this point, I'd love to answer any questions that you would have specific to the SBA and our resource partners. And then when we circle back, I'll get into the lending programs that SBA provides, and we'll go through those in detail. So Selena, are there any questions in the chat box yet?
I don't see any questions in the chat, but
okay.
If you have a question, please either put it in the chat or raise your hand, and we'll acknowledge you when you can ask your question.
Perfect.
I do have a question.
Sure.
I wanted to ask, you mentioned about a program where you get mentorship for 9 years. I don't know if I heard it correctly, but you were saying they will help you advise you for a 9-year period. Can you explain that further?
You know, I'm so sorry. I think this is Samantha speaking because I see your name up on the screen. I kind of missed the last portion of that. I believe that you were talking about our contracting program through 8A, and that's the one that lasts for 9 years. In that particular program, is that what you're talking about?
No, you mentioned something about you get coaching if you're involved with that program for 9 years. I don't know if I heard it correctly.
Yeah, so we do mentoring and coaching with that program. We can sit down and go through any type of proposal that you plan on submitting to a federal partner to gain those contracting opportunities. But when we're talking coaching as well, a lot of our resource partners do that. So if you're not in the realm of a contractor or seeking that 8A certification, then I would suggest going through another one of our resource partners for that. Does that make sense?
Yes, it does. Yes. Mm-hmm.
Perfect.
You have a question?
Thank you.
There's a question in the chat from Lena, and she says, are all of the resources you just talked about free?
So what I will tell you is no, they're not free. Now, I'm going to tell you, they're not going to cost you anything, but they're not free. You've already paid for these products and services through your tax dollars. So why not take advantage of those services? It again, is going to be at no cost to you, but I'm hesitant to say that they're free because we all pay taxes. We all, are obligated to do that. So why not take advantage of the resources that your tax dollars are already paying for? Okay, anything else?
Don't see any more questions in the chat. I don't see any hands up. So.
Okay, perfect. Perfect. So, and we can circle back if you guys think of anything in between, now and the end. But I know that that was kind of a lot of information that we gave out. And I just want to make sure that, you realize that these things are available to you and that you can get the assistance that you need to either start or grow or expand into new markets with your business. that's something that we didn't talk about either, but I'll get to that in just a moment. So right now we're in the midst of the pandemic, as we're all keenly aware of. And with the CARES Act that the legislature passed back in April, we at SBA were provided with a couple of different programs. One of the programs was for the economic injury disaster loan. So I talked about the other services a moment ago, and disaster is that fourth leg of our stool, if you will. We typically would provide disaster assistance to fire victims, to hurricane victims, something along those lines. There could have been previously, like in a hurricane or a flood, even if there wasn't a physical damage to a business or a home or a rental property, there could have been that economic injury. What the CARES Act did was expound on our program that was already in existence. And it provided capital for economic injury in all 50 states and US territories, so that applicants who have a business or are a sole proprietor can apply for assistance through the federal government. With the economic injury disaster loans, through COVID, the interest rate is set at 3.75% for 30 years. So it's a fixed rate loan, an automatic 30-year term. If you're a nonprofit, you have the ability to get a 2.75% loan, again for 30 years. So those transactions have really been the focus of the agency over the last, 10 months, 9-10 months. So we have provided a lot of assistance. With that, I can quote some numbers here. Let me just pull these up real quick. And there we go. With the economic injury disaster loans, we have, again, kind of a more streamlined approach than we typically would with our typical disaster loans. So in a typical disaster, and when I say typical, obviously no disaster is typical, right? But if it were, say, a flood or a hurricane, a fire, something along those lines, typically there's a requirement that you have, the 3 years tax returns, you can debt service, meaning that you still have to have the ability to repay the debt. In the COVID area, we've reduced a lot of the qualifications for access to those funds because of the CARES Act, and that allowed us to do that. So a much more streamlined approach. We're able to just get like a last year's tax return or execute what the IRS calls a 4506T. And that's just an income verification to what was reported to the IRS. But with those programs, it's actually a fantastic way or option for you if you're looking for capital. Now, because of the amount of loans that have gone through, we had to reduce the maximum dollar amount. So typically in a disaster, we could go up to a $2 million loan amount. Because of how many people needed the COVID assistance, these products, or this product, is being capped at $150,000 currently. So we're hopeful that perhaps when Congress comes up with another plan to further assist small businesses that we can increase those amounts. But at this point, we are stuck at that 150,000 or less. There is no minimum loan amount on those. So if you need $5,000, that's, you know, perfectly okay. So the cap is really what we worry about. Again, if you think, even if you're doing okay right now and you're in business and you're just barely scraping by and you think, okay, I could probably make it through this, I really would emphasize that from my perspective, I think you should apply for the economic injury disaster loan or EIDL, because you can always reject it later. You don't have to take it. There's no application fee. There's no downside to this. And if you find yourself in a position of needing that capital, it's going to be very, very important that you already got your place in the line. Because again, we were hit with over 5 million applications. So just thinking about that from a standpoint of us, an agency that was less than 2,000 and now have 9,000 employees, just above, it's going to take time for these loans to be processed. So I would ask for your patience with that. But again, if you haven't applied, please do. This particular program is scheduled to expire on December 31st. We feel we're hopeful that Congress makes some decisions prior to that, and we're hopeful that those funds will be extended. So that's on the COVID EIDL transaction. You can apply right online, and you would go to SBA.gov, so Small Business Administration, SBA.gov, G-O-V, and there's a toolbar right at the top, and it'll say Coronavirus Relief. If you click on that, it'll bring you right into that application, and you can fill it out. It's actually a fairly simplified application, as I stated. So fill it out, provide any attachments that you're able to, or at minimum, make certain when the SBA reaches out to you that you provide those back in a timely manner. So the attachments would be stuff like a business license, or if you're a newer business that was, you know, just put in place prior to February 15th of this year, provide a business plan. Give the loan specialist or loan officer that's going to review that transaction enough information so that they can actually decision the loan. Last year's tax return is great to include. A copy of your driver's license, you can upload that. Unfortunately, in these times, we find a lot of identity theft and a lot of cyber security issues, a lot of cyber crimes. So make certain when you're providing this information that you're providing it through the SBA.gov portal. And you'll recognize that because it'll have an HTTPS and then a colon, 2 forward slashes, and then SBA.gov. So that means that it's a secure site. You don't have to worry about your information being compromised. And again, it's just such a horrible time right now because a lot of folks are really getting taken advantage of because of all the cybersecurity issues and, criminals out there. So beware. With the other program that you may have heard about through the CARES Act was the Paycheck Protection Program. And the Paycheck Protection Program was actually facilitated by our lending partners. So what that meant is a small business would go to their local lending institution, and that would be, one of the big banks out there, or a small community bank, or a credit union, somebody that had a relationship with SBA, and we had given them what we call delegated authority. So that lender was able to make the decision on that transaction on behalf of SBA. So those transactions didn't have to come to us. For the Paycheck Protection Program, that program was 100% forgivable if the proceeds were used correctly. So the bank will need to do their due diligence in looking at the documentation after the loan's provided to make sure that those dollars were spent accordingly. If they are, the bank then will make the recommendation to SBA to forgive that loan. So for the forgiveness portion of it, SBA will be looking at those transactions. That's a different department than what the economic injury disaster loans are, totally separate entity of, or division, if you will, of SBA. Is there a question? Okay, I just heard some background noise. In any case, the other programs that, well, right now we're in the forgivable portion of that PPP or Paycheck Protection Program. So we're processing those forgiveness applications and giving the monies back to the lending institutions that gave them initially. So this is different, as I stated, different division of SBA. With the economic injury disaster loans, those are done directly by SBA. And that's really the only time that we do any type of direct lending is through our disaster division. So we're hopeful, again, that our congressional leaders can come to some type of an agreement and provide further assistance for the small businesses. Clearly, it's still needed. Just, you know, look at what's happening with the restaurants right now. I mean, that's, you know, it's horrible. And Selena and I were talking while we were waiting to log people on, and, you know, hairdressers and, you know, manicurists and these little shops, they're all really suffering right now. So we're very, very hopeful that our leaders will come to some type of an agreement and get these bills passed so that we can get the money back out there to Main Street.
Heather?
Yes, please.
We've got some questions in the chat.
Okay, perfect.
The first one is from Rick Sederi.
Okay.
Who says, well, you can jump in can you say your question, because I don't want to get it wrong.
Hi, I'm trying to find out what is the ideal type of financing that SBA wants as far as basically the package. Would that be something that is involved with the property purchasing, or would it be just funding for just operating the business? Or which type of basically ideal is for SBA type of funding?
Okay, great question. Great question. Thank you for that, Rick. So with the economic injury disaster loan, we could deal with all industries. The only thing that I will preference with that is that they have to be legal industries, like federally legal. So for example, in the state of California, cannabis is legal, but still in the federal government, it's illegal. So any type of industry that would deal with cannabis, we cannot assist with federal funds. You could look to the state funding program for that type of a business, but not to the federal program. When you're asking about an ideal business, really we're interested in all types of businesses. Again, whether it be a landscaper or janitorial service or a construction company, restaurant, beauty shop, anything. So as long as it is, again, federally legal, typically we would be okay. Gambling establishments are, again, one of those industries that we cannot assist. If an entity takes more than a third of their income from gaming, we cannot assist. Now, keep in mind that if we're looking at, say, a liquor store or a grocery or something like that, and they sell lottery tickets, that's totally fine, provided that that income does not exceed a third of the revenue that they generate. Does that make sense?
Yes.
Okay. So does that answer your question, Rick, or did I need to elaborate more?
As far as the person who's financing it, what is the ideal qualification for that? Would it be percentages down toward the purchase of the, the whole package, having a business plan? What is it that is?
Sure. So with those economic injury disaster loans, that required that you were already in business prior to February 15th. SBA does have other programs, and one of the other programs is called a 7A loan, and another is called a 504 loan. And again, these are just names from the Small Business Act, so don't get confused by that. The 7A program could provide working capital, monies to purchase a business. When you're purchasing a business, you're going to need a minimum of 10% down, minimum. If you have more, that's fantastic. So with the 7A program, it provides for a menagerie of different uses. So any uses could be working capital, construction of a facility, equipment, inventory.
Everything could be packaged in, basically.
I'm so sorry, say it one more.
The whole thing could be packaged as a business,
Correct. Yes. Yes, absolutely. Absolutely. Yes. So now the 504 program that I talked about, again, that one is specific to real estate and heavy equipment. So with that transaction or that loan type, it is very specific to real estate. Something that I will mention is that on the 7A program, we do not require that the loan be fully collateralized. And so what that means is, let's just say that you want to borrow $100,000. You, in typical commercial lending, you have to have, $100,000 in asset value or real estate value or something along those lines. With SBA, we require that the borrower pledge any and all available collateral. So that's the key word, is available collateral. So if you have a 401k, we do not consider that as collateral. We will not take a lien on that. If you have, I don't know, I'm trying to think, other investments that your money's tied up in, we will not take those. We take available collateral. So from the standpoint, let's just say you own a house and your house has $200,000 in equity. Yeah, it may be worth $400,000, but you owe $200,000, so you have $200,000 in equity. We then would take a lien on that house for the loan amount, so that $100,000, just so there's secured interest for the taxpayer. Does that help?
Yes, thank you very much.
You're very welcome.
Thank you.
Sure.
More questions in the chat. Angela, you want to ask your question or you want me to read it?
Oh, no, I'll take it. Multiple businesses. Should each one of the businesses, even though they have the same owners, should each one of the businesses apply separately for each of these programs?
That's an excellent question. Excellent question. So there's the first answer, yes, absolutely. You can have common ownership with multiple businesses, by all means. With the economic injury disaster loan, we don't necessarily worry about our size standards. And SBA, because we are the Small Business Administration, we focus on small businesses. So typically it's businesses of 500 employees or less, or 15 million in revenue over the last 3 years. That would be considered small, just basic generic terms, right? I know that's, crazy
We have different ideas of small. We actually do.
I totally agree with you. But with that said, the owner or common ownership is absolutely fine, provided we don't exceed those size standards. Okay. So if with your multiple business types, you don't have more than 500 employees, you don't, you don't have over that 15 million in revenue combined because of that size standard, okay, you're fine. Okay. You're fine. Okay. So what I will preference though is if you're interested, Angela, in applying for that economic injury disaster loan, make certain when you make that application, you're going to put, yourself as the owner or the entity as the owner, and you're going to identify each of those businesses. So if they have common names, make sure that you put a differentiator on there. Does that make sense?
Yes.
Okay, perfect.
Okay, thank you.
Thank you.
And we have another question in the chat. Gino, you want to ask it or you want me to read it?
You can read it. Thank you.
You're on mute. Okay. He says, if I received a loan through the SBA through the CARES Act, would I still be able to apply for the EIDL? Is it the same thing? It was titled as the COVID-19 disaster assistance.
Yes. So that's, again, a great question. There was actually three different, but I'll talk about the third one in a moment. There was two different provisions of the CARES Act relating to SBA financing. And with that, it was the COVID-19 economic injury disaster loan. So it sounds like that's the one that you received. You cannot apply for a second one unless there's a change in legislation. You could have, though, applied for that Paycheck Protection program. So we had many, many applicants that received both transactions because the purposes of the loans were different. With the Paycheck Protection program, it was just that. It was to assist businesses in keeping their staff on payroll, whether or not they were working, keeping them on payroll. With the economic injury disaster loan, those funds typically went to working capital, rent, utilities, inventory, whatever, other use of proceeds. Not necessarily all to payroll or to mortgage or the percentages of them. The other portion of the CARES Act was the EIDL grant or economic injury disaster loan grant. And that was actually a grant of up to $10,000. It was $1,000 per employee to a maximum of 10. And those were given kind of in a first come, first served basis. Those funds have been completely depleted at this point. So again, unless our legislature comes back with additional funding for that program, our hands are tied. We can't do anything. Jean, if you're looking for additional capital, you can still look to our 7A program or 504 program, depending on what you're looking for. The SBA, through those programs, has two mandatory requirements. One is that you have to have the need for the capital. So I know that kind of sounds like an oxymoron, right? Because of course you need the capital, but you have to have a need, meaning you can't get it through traditional channels. That because there's some type of deficiency, you need SBA to intervene and provide a guarantee to the lender. Because remember, those transactions are provided by our lender partners. With that said, if you had applied for a loan through a bank or a credit union or an online lender or any number of ways, and you were declined, say perhaps you were declined for a lower credit score or a previous bankruptcy or foreclosure, or because you didn't have enough capital to secure the loan, then you can come to SBA, you meet that eligibility criteria of not being able to gain access to that capital through traditional channels. Where this comes into play, and it's very convenient, is our banking partners. Our banking partners want to lend you money. They absolutely want to lend every small business money if they know that they're going to get repaid. So if they know that they can get repaid by assets that you have or cash that's secured or something along those lines, they don't need to come to SBA for that loan guarantee. But if there's a deficiency, as I stated, because of, say, credit or bankruptcy or lack of collateral, they can come to SBA and that mitigates their risk. So they're much more likely to provide that financing to the small business with that government guarantee. So I hope that that helps. Okay, anything else?
There is a hand raised, Asia. I'll have her ask a question, and then I have another question in the chat that we'll go to afterwards. Go ahead, Miss Asia.
Okay. Yeah. Yep, you got it right. Thank you. So my question was just in regards to what you were just saying, Heather, about those different loans. I joined a little bit late. How does the Sacramento grant for small businesses, I guess, play in with those different loans that you mentioned in terms of, I guess, qualifying or not being eligible?
No, there's no preclusion of obtaining SBA financing if you've gotten a city or county or even state grant. So it really does not have an impact. Again, there just has to be a need for the capital, and then your business has to be small as far as our size standards with SBA. But if you've gotten a grant through, Sacramento County, it's not going to affect you applying for the economic injury disaster loan or even the 7A or 504. Oh, you're welcome.
Okay, Mr. Rick has another question. He says, I had a business that was mandatory shut down since March 2020 with 14 employees, and he had to let them all go because they couldn't open up due to the location, and no one can tell him what he has to do to qualify for forgiveness. There's no date of opening on the horizon. They're part of the inquiry at Sac State University. So is your question, how do you get your loan forgiven in a circumstance like this? You're on mute, sir.
Qualify for forgiveness, we would have to hire the employees back, but we are under mandatory shutdown. That means the university is not open, so we cannot be open. How would I take advantage of the forgiveness? Our hands are tied.
So you've already applied. I'm sorry, Rick, I didn't mean to interrupt. You've already applied for the Paycheck Protection Program and were approved, and you received the funds.
Correct.
So you can still apply for that forgiveness at any time.
Right.
I'm sorry?
Because I can't hire anyone back because it's closed.
There's no qualifying, Rick, there's no qualifying necessary. The only provision with that transaction was that you spent the funds on at least 60% on payroll and 40% on rent or mortgage, utilities, insurance, health benefits, etc. So basically, all you need to do is to provide the employment records showing those items were all paid and those statements for the mortgage or rent or utilities. And that's how the loan is forgiven.
Right, but the 60% of the fund that it will given to you, if you hire employee back, I can't hire him. The school is closed and there is
absolutely. So in the care, that's a great point. So let me expound upon this. With the CARES Act, there's a provision in there. There's a couple of Federal Register notices. So those are updates or enhancements to the act or clarifications. All of these can be found either on SBA website or the Treasury website. So you can go to treasury.gov as well. Okay. There is a safe harbor for employees who have attempted to hire those folks back, and through no fault of their own, they're unable to. So your scenario of your business being closed and no, expectation on when it's going to reopen, that would fall under that safe harbor provision.
Safe harbor. I'm going to look into it. Thank you very much.
You're quite welcome, and I am happy to assist you with that. I know Selena's going to put my contact information in the chat, so you guys, I'm available to assist.
Okay, very much.
Okay. Sure.
We have a hand raised. Lena, you want to ask your question, and then I have another question in the chat.
Yes. Hi, Heather. Thank you for being with us tonight.
Oh, thank you.
I'm enjoying all of this important information. The question that I have is for all of the loan programs that you mentioned in the beginning of this workshop, and you said that some of them required 2 years in business. Now, would that 2 years be 2 years the business was established, or 2 years tax returns, or how was the 2 years determined?
Okay, so let me, thank you so much for asking that. Let me just clarify. The 8A program, which is the contracting program through SBA, that requires that you've been in business for 2 years. Our lending programs do not require that. We actually, through our 7A program, we can do startup entities. As long as you've got that minimum down payment, a minimum of 10%, we can do a startup. So any of the traditional loan programs will accommodate that scenario. With the economic injury disaster loan, or even with the Paycheck Protection program, it required that you were in business prior to February 15th of this year. So as long as, even if you started your business last year, you could still be deemed eligible for the EIDL transaction. And again, we still are accepting applications on that program. So does that help?
Yes. For the 8A, for the 2 years, does that from the day your business was established, or is that for 2 years tax return? Like, how do you determine the 2 years for that, for the 8A?
For the 8A program, they're going to look at, actually, it would be a combination under the 8A. So the general term is that you've been in business for 2 years, but that's not stating that we would require 2 years of taxes to deem you eligible to enter that program. But if you established your business through proof of, say, a business license, we could take that as proof. So say, for example, you started your business in, in 2018, and you've got your business license then, but you didn't generate any revenue until 2019, you could still be deemed eligible for that program. And
okay, what if you didn't, what if you haven't done any business with, if I know several people who have businesses that, were established, however, they never did anything with them. So what about ones where they really didn't do anything with those businesses?
Yeah. So again, we would look at kind of what the agency refers to as totality of circumstance. And so we would say, if you don't have any revenue, it's not really likely that you're going to be able to get those federal contracting opportunities. Perhaps a better option for you would be to go through the Procurement Technical Assistance Center, through the Women's Business Center, and get access to city or county or state contracting opportunities first before you entered that 8A mentorship program.
Got it.
Okay.
Thank you.
You're welcome.
Okay, I have another question. It says, how do I go about getting the forgivable portion of the EIDL taken care of? I haven't received anything from the SBA as far as what to submit to get it forgiven.
Okay, so the economic injury disaster loan is not a forgivable loan. That requires it be repaid. So the transaction, which is the economic injury disaster loan, has to be repaid. The disaster grant, the COVID grant of that 10,000 or less, there's nothing for you to do. It's automatically forgiven. The caveat is if you got an economic injury disaster grant and then got a Paycheck Protection Program loan, in the federal government, there's something called duplication of benefits, and they don't allow it. So if you picture it as kind of double dipping, if you will. So if you got the PPP loan and you're asking for the forgiveness for that loan, but you got an EIDL grant, that EIDL grant will be deducted from your PPP forgiveness. Does that help?
Yes.
And there is talk within the legislature of changing that rule. So we're hopeful that something will come of that, but at this particular time, those EIDL grants will be deducted from the PPP forgiveness.
I think Ms. Della has a question.
I did. Thank you. Turn your phone down, sister. I'm sharing the room with my sister, so we get a little feedback. So let me let my sister turn her phone.
Okay. No worries.
Okay.
Yeah.
So my question is, if you got the economic,
injury
grant,
economic injury disaster loan, EIDL, the loan.
Oh, can you hear me now?
I can hear you.
Okay. So if you got the economic injury, the one that first came out with COVID in March. If you got that one, that was not for you can't get that one forgiven?
If you got the loan, it is not forgivable. If you got the grant, there's nothing for you to do. It's already forgiven.
So, okay.
And you should be able to know the difference because with the loan, you would have signed a note and the note would have the terms of repayment. And it would have that interest rate, 3.75%. With the grant, there was never an interest rate disclosed, no repayment terms because it was a grant.
Okay.
Okay, I hope that helps. You're welcome.
I don't see any more questions in the chat. Oh, Mr. Harris. Mr. Harris. Hi, Mr. Harris. You have a question? Ask your question, Mr. Harris. You're on mute.
Okay. My question is on that 7A loan. The 7A loan, I understand that you have to have available collateral. What does that mean? Available collateral.
Yeah. Again, this gets a little strange. If you don't have to have available collateral. If you have collateral, we will take it to secure the loan. We'll secure the loan to the maximum extent possible. If you have no collateral, you don't own anything, there's nothing to secure. It does not, pardon me, it does not deem you ineligible to not have any collateral. But if you have it, that's when we have to take it.
Okay.
Does that make sense?
That makes sense. Now, secondly, with that, I understand that that loan can be released relatively early. I mean, it doesn't take a year to get it. Is that right?
Yes, absolutely. Matter of fact, banks and credit unions are, SBA issues them what we refer to as delegated authority. And so those banks and credit unions and even some online lenders are able to facilitate those transactions rather quickly. It's really dependent on them and their workflow. So they can be done in as little as, say, 2 weeks. But in some cases, if there has to be an appraisal, if there's real estate involved, it could take much longer, up to 90 days in some cases. Say for a commercial building, if they have to go through environmental inspections and appraisals and all of that, it could take time. But otherwise, some lenders can do them very quickly.
Okay.
Our recommendation, typically, when we're talking to small business or potential small business applicants, is to approach whomever you already have a banking relationship with, because they're going to be the ones that know you and that know your business cycles and that know, you know, they've dealt with you for 20 years or whatever the case is. Check with them first on financing, but if they can't help you, then call us and we can refer you to a lender within your community that's able to provide those capital or that capital for you, depending on your business type. So I can tell you, like right now, it's going to be very difficult to get a lender to look at a restaurant. Clearly, because of the environment we're in, we don't know when these restaurants are going to open back up. When, even if they do open back up, what kind of capacity can they serve? Because they're not going to be generating the same type of revenue that they have in prior years. So those transactions are going to be hard to get through. But, you know, another type of business, we have lenders that we know kind of what their appetite is for lending opportunities. So we can match you up with the lender. There's also on the SBA website, a program that we have called Lender Match. And what that program is you go to sba.gov and just type in the search bar, Lender Match. It'll bring you to a new page where you type in the parameters of, oh, see, great. You type in the parameters of the transaction that you're looking for. With that, the system then will compile that information, and we send it out to our lender partners that are signed up through Lender Match. Those lenders will then reach out to you if they're interested in your transaction. So it's a lot less work from you being the small business, having to call around, having to have people pull your credit, which unfortunately will lower your credit score every time it's pulled. So this program is fantastic for matching you with the right lender that can help you with the industry that you serve.
We have another question.
Thank you for that, Selena. Sure.
I'm going to go to Asia first, and then I'm going to ask this question from Derek, and then we're going to try to wrap up in 1.5 minutes because now we're open.
Okay.
Okay? So go ahead, Asia. Ask your question.
Yeah, quick question in regards to the 10 hours of instruction that goes as part of, I believe it's the City of Sacramento's forgiveness of the grant.
Mm-hmm.
Because I signed up for this course, but I had difficulty kind of finding, like, I guess all of the available courses to sign up for that would qualify for that 10 hours. So are you guys providing any instruction on how to meet that 10-hour qualification, or what resources we need to
So that's a question
sign up
for
for?
me. That's a question for me, and I'll put my email in the chat, and you and I can correspond offline about that.
Thanks.
Perfect. Thanks, Selena.
Okay, Derek, do you want to ask your question, or you want me to ask it?
Yeah, I actually just try to get a PPP loan forgiveness.
Mm-hmm.
How many employees require currently to get the forgiveness? Are they part-time or full-time? Does it matter?
So the way that the CARES Act was written is it was based on full-time equivalent. So keeping that in mind, if you have one full-time employee that was on the payroll and they, you know, because of the circumstances that we're in, are no longer there or can't return, and you've got two part-time folks, you could make a case for that. We look at each of those kind of individually, but keep in mind that there's a lot of safe harbors for what we're experiencing right now. Again, I know I keep coming back to the restaurant industry as an analogy, but that industry has not been able to hire back all of the employees that they had to let go or that, you know, were affected by them closing. So we understand that. We basically are just going to ask for a narrative or, you know, a couple of sentences on if you tried to get them back, how did you try to get them back? How did you replace them if you were able to? But if your business is still closed, like the other gentleman that we spoke to a few minutes ago, that's through no fault of his own. It wasn't that he was obstinate and said, I'm not going to hire these people back. It's that he can't hire them back. So I would presume that you could be in the same scenario, but I'm happy to talk to you about that if you want to give me a call, Derek.
Okay, can I have your phone number?
Sure. I think Selena put it in the chat, but I'm happy. I can tell you
yes,
guys.
I got it.
Okay,
I see it.
Perfect.
You have a direct office number, right?
I do.
So you only answer the phone during office hour?
No.
Can I call you tonight?
How about tomorrow, Derek? My stomach is growling if you guys can't hear it.
I know, I'm just joking.
No, that's fine.
Thank you.
That's fine.
Okay, this is it. This is it. Danielle Price asked, if you received an EIDL for one business, will they pull another credit inquiry for your second business?
So honestly, my understanding is that we have since changed the guidance and we're not pulling credit on applicants any longer. So my answer to that would be pretty much no. But if you're already in the system, we would know what your credit looks like and it would automatically pop up into a new transaction. It's all based off Social Security number and EIN number.
Awesome. Heather, you have been fabulous. This is my round of applause for you without disrupting everybody. Oh, how about this? I think that's
You're so sweet. Yeah.
Thank you so much. Thank you everybody for coming and for hanging out and for hanging in there, because I know we're 4 minutes over, but I hope you guys got some really good information and got your questions answered. And if you didn't, then I put Heather's information in the chat. I'll hang on for another minute or two so you can write it down. And we will see you tomorrow for Angela Moore's business structuring class. Woo-hoo. All right. Thank you guys for coming. See you tomorrow.
Hey, thanks so much for having me. I appreciate it.
Oh, you were so awesome. Thank you so much.
Anytime.
Thank you, Heather.
Don't say that.
Thank you. No, seriously, this is what we do. This is what we're here for. So anytime.
Thank you. You're still getting rounds of applause.
Thank you so much. Good night, everyone.
Good night.
Good night. Hey, Gwen.
Hi, Dylan.
Hey.
You said something right at the end there, and it's like you're already in the system and it would automatically pop up, and something I needed to ask a question and it went
about the credit?
Yeah, I think it was, but I can't remember what you said right now. So
yeah, if you're applying for a second business that you own, we would typically pull a new credit report. However, we have been told from our disaster team that they're no longer pulling new credit reports. So if you're already in the system, it would transfer over based on your EIN, employer identification number, or SSN.
Okay.
Okay.
Oh, my curtains fell down. But the question was, do they actually do the loans based only on the EIN number if the business is old enough, or does it require the personal Social Security also?
It does. It does.
Okay.
So we would always require a person to be associated with the loan.
Okay.
Not just the business, always the person.
Okay, that was the question.
Sure.
Thank you for backtracking.
No worries. No worries.
Thank you for today. This was great.
Absolutely. It was my pleasure.
I've got to hop on the next call.
Okay.
Bye-bye.
Take care.
I'm talking about.
Hello.
Hi.
That's Mr. Harris.
Yeah, always nice little bit to yourself.
How do you get your picture back on here?
You have to push.
No, you know your picture here.
That video at the bottom. There you go. Hi.
Go.
Where'd it go? Oh, there we go.
Yes.
Okay, can you hear us?
Yes.
Hear you?
Okay,
Yeah.
you were talking about the chat, and we don't see where this chat is.
Can I see from here fast?
Down at the bottom of your screen, you should see a little box just about in the middle, and it'll say chat.
Yeah, we don't have that.
Are you on an iPad?
Yes.
Yeah, we're on an iPad.
That could be why.
That's
Okay, could we get your email address so we can get some information?
Absolutely. So my email address is my first name, Heather, and then a dot or period.
Hold on.
Okay.
H-E-A.
I'm like,
H-E-A-T-H-E-R. And then a dot. My last name is L-U-Z-Z-I at SBA dot G-O-V.
G-O-V. SBA.
SBA for Small Business Administration.gov.
Okay.
So what is it? This is it for?
That's a dot. Okay.
Do you need the office phone number?
Sure.
Okay. The office phone number is 916-735 1700. That's just for general questions. If you have any questions in particular to tonight's presentation, you can call me directly, and that's 916-735 1709.
That's it to 9.
Yeah, that's Heather.
Call to 9.
Okay, thank you, Heather.
You're very welcome, you guys. Take care.
Okay, I'm going to shut it down. Everybody has had enough time to get her phone number. If you didn't write it down, you done missed out.
All right. Again, Selena, thanks so much. I appreciate it.
Oh, you are awesome.
Selena, thank you. Yeah. So see you tomorrow, 6 o'clock?
Yes, ma'am.
Okay. See you then.
Okay. Take care.
All right.
Good night.
Bye, everybody.